Let's go to Kevin Hassett on all this. Of course, he was President Trump's Council of Economic Advisors chair, author of The Drift, among other things. Kevin, this president right now is saying by the end of next year, all of this will be behind us. We'll be back to normal. What do you make of that?
You know, God willing, that's true, but I think it's pretty unlikely. What's going to happen is that, as we've been talking about on your show now for quite a while, that inflation's going to drop to about the wage inflation rate, which is like 5 or 6%, and then they're both going to be stuck there until the unemployment rate goes up a lot. And right now, you know, initial claims for unemployment insurance are probably, what, about 100,000 a week below a recession level. And so we don't see the budge in the unemployment rate that would suggest that there'd be downward wage pressure. And until we see downward wage pressure, I think inflation is going to stay pretty high. So I would guess a year from now, you're talking 4, not 2.
All right, so we're talking a year from now, 4, not 2 on inflation. Where are we on interest rates? If we get to around the 4% level to close out the year from zilch, 0, the beginning of the year, where are we next year at this time?
Right. Well, the Federal Reserve minutes, right, they basically mentioned that there are a lot of inflation downside risks because they recognize that inflation can be very sticky. You know, one way to sort of look at this is you could back out from futures and options data what the whole probability distribution of the federal funds rate is out a year from now. And it's amazing how much probability options markets are putting on interest rates going even above 6. And so I think that there's a huge amount of interest rate uncertainty right now, that the Fed's case of sort of going to 5 and stopping is, you know, a best case scenario. I think a best case scenario that's pretty unlikely to be realized because the inflation numbers are going to stay high, as I said. And so my guess is that they're going to go up a quarter a point, a quarter a point, a quarter a point, and take us to 6 next year. And that's really what people's base case should be.
You still see the consumer being as resilient as they have. In other words, continuing to buy. We get strong holiday sales figures. Which again is a little bit jarring considering everything that's been going on. You see that continuing?
The consumer is the thing that I've gotten wrong the most this year. I've been really stunned by the strong consumer spending, especially in the fourth quarter. But if you look at year-over-year credit card debt, it's up 15%. And if you look at the sort of residual COVID savings, you know, it's all just about gone. And so my guess is that consumers can't jack up their consumer credit another 15% next year. And so unless they see real income growth, then consumption is going to fall back. And I think this is one reason why people say there are a lot of headwinds going into next year and a lot of recession talk, because the consumers basically saved us from recession in the second half of the year, but they did it on borrowed credit that, you know, they can't keep at that rate.
All right, Kevin, thank you very, very much. Kevin Hassett, Donald Trump's former Council of Economic Advisors, head